Hi guys, how are things? In this video I want to have a chat with you if you're a PAYE worker, and we're going to talk about pensions and tax relief back from last year 2020. It doesn't make a difference whether you have a company pension plan or not, so we're going to have a look at the example I gave on the Louise McSherry show on Saturday on 2FM. So all in the discussion with Louise, we spoke about how people can claim tax back from last year, as in from 2020, by using a pension contribution. So let's use a couple of examples and a couple of assumptions. Let's say we have somebody that's on €60,000 of a salary, and let's say they are 42 years of age. Now, I just want to show you a couple of things for everybody actually when it comes to pensions. First of all, depending on your own situation in relation to your age and your income. So if you're under 30 years of age, you can put 15% of your salary into your gross salary into a pension plan, and the older you get, the more you can put in. So for argument's sake, if you're 45 years of age, you're in between 30 and 49, you can put in 20% of your salary. If you're 58 years of age, you can put in 35% of your salary. And if you're over 60 years of age, you can put in 40% of your salary. So what do we mean by put in? It means you can make a contribution of a percentage of your salary and get your tax relief on it. So let's look at somebody that's earning €60,000 per year. So on $60,000 per year, you would expect to be paying income tax, a little bit of 20% and a little bit of 40%. You'll be expected to pay income tax in and around about $13,000 per year. Okay. Now, when you look at that figure at $13,000 per year, that excludes your PRSI and your USC. But when you look on your summary as taxes from last year, you'll see that 13K. Now, if you want to get some of that back, you can, and it's not too late. And the way to get it back is by number one, claiming for medical expense or something that you might have incurred last year, and that'll be refunded about 20% to you. But if you're looking to put in a pension contribution, by the 31st of October this year, you can make a check into your pension plan and claim it back against this 13,000 from last year. So what do I mean by that, and how does it work? Well, let's say for argument's sake, somebody has a surplus cash. So from the COVID-19 lockdowns, they have money in the credit union, money in the bank, and they don't know what to do with it. Well, here's an idea. This person on €60,000, let's say they are under 40 years of age. They put in 20% of their income of 60,000. So the potential there is they can put in €12,000. But let's just say they have €8,000 in the credit union. They're going to simply make an €8,000 contribution into the pension plan. Okay, and that contribution here is going to get tax relief at 40%, because that's the higher rate of income tax they've paid. And they've paid 8,000 or more in this 13,000. More than 8,000 of it was at the 40% bracket. So that means you're entitled to get money back. So obviously, if you multiply your €8,000 by 40%, you're going to get €3,200. So the client is going to get €3,200, and that's going to be coming back from the revenue commissioners. They're going to put €8,000 into the pension plan, and they're going to get €3,200 back into their own bank account. So that means they put €8,000 in, and they only have a net cost really in the bank account of $4,800. Or if you want to look at it this way, they've got a 40% return. Now, when they put it into the pension plan, let's say you said this client is in their 30s, they're probably going to have 30 years to get to retirement age. In the pension plan, it's going to grow tax-free, and it should be invested. And that's what we're here to help clients do. So we're here, number one, to identify what your gap is, how much you can fund from last year and how much tax you can get back, and also what funds to pick that you get really good growth over the next few decades to make sure your pension is robust as possible. Now, I mentioned, if you're self-employed, this is open to you as well. And when people talk about tax back or tax deadlines or 31st of October, they generally think it's really only for self-employed people. But this is a massive opportunity for PAYE workers. And just to recap, you can also do this about the 31st of October, anytime from January the 1st this year. You can do it today if you wanted. You could have done a claim for your medical expenses, but also stuff like this in relation to pension plans. If you have a company pension plan already, you can top it up by using this depending on what you've already paid in. So this is obviously your limits. You have to take into consideration what's already been paid in. So let's say you're going to put in €8,000. Well, we said you could put in this case, you could up to 12,000. And let's say you'd already put 6,000 into your company pension plan. It means you still have a gap to put another 6,000 in. And if you're in a company pension plan, you simply put this into what's called an AVC. It's an additional voluntary contribution. That can be done through your work scheme, or it can be done privately. We could help you with that by opening up what's called a PRSA AVC. If you're in a PAYE employment and you do not have a company pension, or you don't want to get your employer involved in this, you can set up your own PRSA, personal retirement savings account, or your own personal pension. So that's how it works. It's a really good way to get tax back out that you paid from last year and make sure it's working for your future rather than being lost to the revenue commissioners. Any questions, and as always, please hit us up on questions@askpaul.ie or any of our social media outlets. Thank you.